Welcome back to Explain the Charts. Today is March 24th, 2026, and we are performing an in-depth analysis of Alphabet Incorporated, symbol Google. The market is currently navigating a sea of red as geopolitical tensions between the US and Iran have sent oil prices surging back toward the $100 mark. Alphabet closed today at 290.44, representing a significant 3.85% drop as the Nasdaq faces heavy pressure. Beyond the macro environment, Google is facing renewed regulatory scrutiny from the EU regarding its AI dominance and an upcoming meeting with antitrust chiefs. On the fundamental side, Google is doubling down on AI with its new partnership with Agile Robots and the launch of Gemini-driven shopping integrations with Gap. However, investors are showing concern over high capital expenditures and heavy insider selling reported recently. As we look at the daily chart, we can see the massive uptrend that dominated 2025, taking us from the 170s all the way to a peak of 349 in early February. Since that February 3rd high of 349.00, the stock has entered a cooling-off period, characterized by lower highs and increasing volatility. The current price action is testing the resolve of long-term bulls who have enjoyed a nearly 100% gain over the last 18 months. Zooming into the late 2025 and early 2026 period, we see a very specific technical formation taking shape. Notice the peak at 306.42 on November 20th, followed by a brief dip and then the massive surge to 349 in February. The current drop back toward the 290 level is starting to complete what many analysts call a head and shoulders breakdown. This pattern is often a precursor to a major trend reversal if the neckline support fails to hold. The volume on the recent down days has been significantly higher than the up days, suggesting that institutional distribution may be occurring. Specifically, on December 11th, we saw a massive green candle with 67 million in volume, which acted as a launchpad for the 300-plus run. If we look at the range from 1764000000000 to 1774000000000, the acceleration was nearly vertical. Now, the price is retracing into the high-volume nodes established during that late 2025 rally. Correlating this to the news, the $32 billion was acquisition and the $20 billion bond sale in early 2026 highlight Alphabet's aggressive, yet expensive, growth strategy. This peak negativity regarding capital expenditure is finally showing up on the charts as a price rejection at higher levels. Switching over to the 1-hour chart, the short-term pain becomes even more apparent. We can see a clear descending channel that has formed since the middle of March. Every attempt to reclaim the 310 level has been met with aggressive selling, likely fueled by the reports of the US-Iran conflict escalating. On March 17th, the stock made a run to 311.42 but was swiftly rejected, closing much lower by the end of the week. Yesterday, March 23rd, we saw a brief attempt to stabilize around 302, but today's session saw that floor completely fall out. The 1-hour candles show a series of gaps down, which indicates a lack of liquidity at current prices and a rush for the exits. We are currently seeing a technical oversold condition on the hourly RSI, but in a trending bear move, these conditions can persist for quite a while. The immediate resistance on this time frame is now the 300 psychological level, which previously acted as support. If Google cannot reclaim 300 within the next few sessions, the technical outlook remains bleak for the short term. Let's look at the 15-minute data to see how the market reacted to today's news flow in real time. At 11 o'clock Universal Time Coordinated yesterday, there was a massive spike in volume that briefly took us to 307.40, likely a reaction to the Gap partnership news. However, that move was entirely sold off by the 12 o'clock Universal Time Coordinated candle, showing that traders are using any good news as an opportunity to reduce exposure. Today, the 15-minute chart shows a steady grind lower with very few meaningful bounces. The support we were looking for at 295 was sliced through like butter during the morning session. Notice the cluster of transactions at the 292 level. There is a clear battle happening here between value seekers and momentum sellers. The fact that we are closing near the lows of the day suggests that the selling pressure is not yet exhausted. In this time frame, look for a double bottom or a V-shape recovery to signal an intraday reversal, but as of right now, we haven't seen any such signs. The intraday VWP has been trending downward all day, confirming that the bears have total control of the price action. Returning to the daily view for our long-term outlook, we need to talk about the why behind these moves. Long-term, the bullish case is built on Google's wide moat and its dominant position in the AGI era as proclaimed by industry leaders like Jensen Huang. With a P/E ratio of 27.95 and net income growth of 32%, the company is still a financial powerhouse. However, the short-term bearishness is driven by the 5% bond yield and the potential for a regional war in the Middle East. When oil prices rise, tech stocks often suffer as inflation fears return and consumer spending is expected to tighten. We are also seeing software stocks across the board decline due to fears of AI disruption, ironic as that may be for an AI leader like Google. Key levels to watch. The primary support sits at 280, which was the breakout point back in October 2025. If 280 fails, we could see a deeper correction toward the 250 level, where the 200-day moving average would likely provide a safety net. On the upside, a daily close above 307 is required to negate the current bearish head and shoulders narrative. I believe there is a 60% likelihood of testing the 280 support level within the next 2 weeks, given the geopolitical climate. A reversal would require a cooling of Middle East tensions or a stronger than expected earnings preview from the hyperscaler sector. Watch for the EU's decision on Google, as a favorable or priced-in outcome could provide the catalyst for a relief rally. For those looking to trade, waiting for a confirmed bounce off the 280 level or a break above the 300 to 307 resistance zone would be the most prudent approach. Alphabet remains a strong buy for many Wall Street analysts, but the technicals suggest that patience is key in this volatile environment. Thank you for watching Explain the Charts, and remember to stay disciplined with your risk management. This video and its contents are for informational purposes only and do not constitute financial advice. Always do your own research and consult with a professional before making any investment decisions.